Good morning and welcome to today's webinar, which goes by the name Real-Time Daily Trading Ideas. This is our internationally oriented webinar addressed to traders all over the world. We will be speaking about trading ideas, strategies, market screenings, and will be answering your questions. At this point, I would like to introduce myself to the audience. My name is Alex Raftopoulos and I'm a new employee of Admiral Markets in Berlin. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account. If you are a starter, please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. The statements made in this webinar only represent the personal opinion of our traders. You can also find the whole risk disclaimer on our website. As many of you will know, as of August 2018, the regulatory framework has changed. Here you can see the differences between the old and new margin requirements. As a retail trader, you would need a margin of 3,333 euros to trade one lot euro-dollar. A professional client, however, only needs a margin of 200 euros for the same order size. You can see the advantages of professional status in this list. Please be aware that the professional status will not be set automatically. You will have to apply for it. Here you can see the schedule for the week. Dirk will be the trader for today. And before I finish off with the introduction, I would like to invite everyone interested in trading to try us out and benefit from the best index and forex offerings with spreads of just 0.8 pips. Please feel free to have a look around our website and explore our international activities, and do not hesitate to contact us should you have any questions. Well, enough of me for the moment, now it's Marcus' turn. Good morning, Dirk. What's your outlook of the markets for the moment?
And let's start with a first try in transmitting you guys something via the chat. Hopefully that works out. Just let me check out if that is going to be transmitted to you guys, because I just want to give you that one on top. If you currently open it via the tool here, you will find it at my Twitter feed, FX Dirk. I just want to simply start with the British pound, due to the fact that we got a lot of trouble going on there in London. And as you may know and already possibly heard and read in the news, one minister after another is taking his head. And somehow there was a try to get a vote of confidence in Great Britain, so that they shared and kicked Theresa May out of business. So far it didn't work out, but it's still possibly that there is a lot of trouble ahead. And possibly that means a lot for the British pound in the let's say in the middle to longer run, in a couple of days and weeks ahead. But it doesn't mean that there is nothing like a little bit of a relief in the pound today, or possibly the next 1 or 2 days. I would not advise to stay long or short in the pound or active in the pound over the weekend. I definitely would not advise to do that. If you like to trade the pound right now, you should do it from a scalping on simply a 100% day trader's perspective, and do nothing like holding it overnight, because you never know. You're opening your platform at Monday night, Sunday to Monday night, and you might be losing your panties. So that's not the way you should do it. Looking at some, of course, data into the chart, into the cable chart, I will close that one. down here. Hopefully you guys could open that. That is simply, before we get into the chart technical details, that is simply the so-called agreement, the so-called draft agreement between the European Commission and the United Kingdom. So imagine yourselves, you'll be writing hundreds of pages, and you'll be the guys, not only the media guys, but only on top of that, the politicians and some economic research guys reading all these hundreds of pages. And a couple of days later, you can simply just throw it out of the window because it's not longer valid because whatever happened, they simply need to negotiate something new or whatever. So anyway, if you're interested, just browse through the pages and maybe you get something like finding the light somewhere. Okay, going into the chart technical stuff. Let's check out the really long-term setup. So we'll close that market watch here to the left side, and we'll start with a couple of Fibonacci lines. Important to say that we are doing that step by step from the long term. Imagine that the pound once was at over 2, so 213, or let's say, let's check that out, almost at 211.63. So that was the high in 2007, in November 2007, before the financial crisis, or like the financial crisis already started melting around. So the low, the absolute low here was 111.23. That was October 2016. So we are combining these two levels for a Fibonacci retracement analysis, and you're getting a couple of lines which you see on the monthly basis now in blue. We're gonna skip through that to the weekly, and we'll be doing the same. Let's check out where we find some interesting spots. Of course, we will use the all-time low here, or the low here, going up to this last high. We're checking out if that is correct. We're seeing that 143.44.6, 143.76, so that's correct. We'll be dipping in that here. And of course, we need to change the line into black, just not to disturb our eyes and not to get confused later on when we try to find some so-called clusters. And these Fibonacci clusters, you will see the first ones right here at the level of the 23 Fibonacci retracement. We're going to pick it up to the daily, of course, and going from the last high here, excuse me, from the last low to the last high, and changing that one, of course, into another color. Of course, it takes some time just to get that stuff done. But I didn't want to prepare that just because I wanted to show you what I'm talking about regarding all these clusters. All right, so now we're going into more details to the 4-hour chart just to mark some clusters, and we will be taking these so-called shapes as I always use them, and marking that level here around the 130, 131.20s, and doing the same down here when we just squeeze the chart. It doesn't work right now. I'm going to the downside here as well. When we just squeeze the chart, you will find a lot of stuff down there and going in direction to 124, 123.50s. So first of all, taking that indicator on top of that, it's a relative strength indicator on the 4-hour base. Going back to this daily just to show you that we are not even oversold territories, going back to 4-hour, and of course pushing in there so-called moving averages. And the so-called trend moving averages is the 200, which we will be using as a black line here, and the 100, which we will be using with a green line. So changing that one in 100. All right. So just in case we might be scratching up and we'll be trying to catch that 61.8 level. I will be marking that one as a so-called target for this trade setup. which are already entered and not far away. If you can see that lines here, you can see the buy limit. It's just a small trade. You can do it whatever you want, how much your position size, how much your account is allowing you, but don't don't overdo. Just remember that you don't have to, that you need to avoid a so-called misconception between the size of your trade and your account size. So always obey risk and money management rules and don't overdo. Okay, so there's a target, a possible target, scratching in direction to 129. So let's just mark that on top with my so-called rectangles here, the so-called blue box, trading boxes. Like I always use them just to show you guys where the trade possibly is running into. On top of that, maybe somehow interesting, today's barriers, today's options. There are some Forex flow options expiring. Already we are hovering around that 128 marker, and there was 1.05 billion expiring. So that is already interesting that we might be staying around that until the expiry. In direction in the next hours. But interestingly, there might be another barrier down the road, 127.50s, which is half a billion dollars. So might be scratching that one on top. So there's a buy limit for the 127.65, and there's a stop loss for 127.35. So just in case this market is going to be dipping back again and scratching and coming closer to that 127.50 barrier, that might be a trade setup which catches this one. So this is the one and only idea behind that, and of course a possible reaction into the next hours, that there is so-called relief move to the upside back up to the 61.8 retracement. All right. Going into the German DAX, just deleting all this stuff here, and just getting a so-called naked chart to just show you guys where we are possibly heading to. Going to the 4-hour chart here, and of course paying attention to our current low. That's the low we are still watching for. Let's check it out if that is the correct one. 11.49. This is the one we should mark that. And on top of that, we already scratched. If you can see that one, we already scratched that yesterday with that deep dive and testing that 61.8 level from this kind of a move. You might be scratching the upside road in direction 11.5. 11.550s, 11.680s back up. Just in case you don't know, there is a witching day today at the Eurex. So the Eurex data is quite interesting in saying that we might be hovering around these 11.350s until 11.550s. So that's the possible moving box, trading box. And it might be, of course, interesting to go long when we scratch in direction 11.350s, and it might be interesting to go short when we scratch 11.550s. That's just a fact, because when you check out the data from Eurex, you see a couple of open interest different kind of levels, and you see a couple of bigger levels around that markers. I already told you 11.350s until 11.550s. You will find that on the Eurex site, Eurex website, and checking out the so-called options, ODAX, it's called ODAX, and you will be finding that levels and even the data of open interest, everything is free. It's free data, so everybody can look into that. Okay. Of course, besides the fact that at 13 CET that these kind of options are about to expire, a couple of single stocks options are going to be expiring as well. So that might be interesting to have a look at a couple of German bigger so-called blue chip stocks. Where's the market watch? Checking that stuff out to the downside, and going into some of those bigger bigger moves. Of course, as I always speak about, because I like to speak about that buyer stock, because it got jet to the downside, and because all of these so-called blizzard ensuing in California and a couple of other US states right now, interestingly diving around that and daring sub that 63 level already. You can see that buyer stock here. And possibly some relief coming into the so-called expiry date today, possibly. I'm just saying. So that might be one of those stocks to trade, just to trade the so-called dips, but not into the long run. Not holding that stuff into the weekend, possibly. I'm not speaking about a so-called investor strategy. It's just a trading strategy to doing that this day on today. Same stuff with the Deutsche Bank share, that dipping in direction 60s, and interestingly to be speccing back up in direction of the level of €9. And so far as you know, where is it? And you got the stuff about SAP, which is same stuff here, diving into and a little bit sub that 92 level. So possibly a nice catching that so-called bottom between 91.80s and 92 to get a re-long scenario or in direction of the current daily highs at 93 and even to the upside to 95. That would be something like 2 or 3 days holding. Okay, enough for that stuff. Enough for single stocks, and just hiding that here as well. In the last week, so just giving you a heads up on that one, we spoke a lot about that natural gas stuff. Now look at that, tremendously spike up, and you see that it's skyrocketing in direction to the $5 level. I gave you the analysis a couple of weeks ago, and I said that we might scratch the $4 level. Couldn't imagine that the skyrocketing process is going up the roof there. And this has to do with a lot of technical future stuff. If you like to check that out, you can see all these informations about the next contracts, following contracts at the CME website. So www.cmegroup.com, which is one of the biggest exchanges for options and futures in the United States. And you'll be finding a couple of those informations when you just type in Henry Hub natural gas contracts, and you'll be seeing that this kind of a level, we'll be marking that this kind of a level, just horizontal line, from this 4-hour, $4 level, won't be the fact into the next month ahead. So if you check out the contracts which follow the current contract, you will be seeing that we are definitely sub the $4 marker. So what does that mean? Of course, things are about to change in a minute with some facts to be delivered from the current ask side, from the material side, and stuff like that. But in the longer run, contracts are showing you somehow that this kind of overdoing of a spiking process here is the first session is possibly done, and we'll be going back down to that 350 level again into the next 1 or 2 weeks. So that depends how much the story out there is going to be played with a strong winter, a strong icy winter in the US, and with let's say a really low level of this natural gas commodity of storage, storages, international storages and American storages, and that is pretty much low to the current time. Okay, while we are speaking about that stuff, we're gonna check out this level of the DAX, which is now diving sub the 11,400 marker and is coming in the direction of this daily low. And it might be interesting to just observe that and going long at the 11,360s, 11,370s with a 30 to 40 points stop loss and trading that in direction to 11,450s. But of course, of course, in quotation marks, observe the market news, whatever is going to happen between London and Brussels is very important for the whole European markets. And on top of that, always try to catch the news around this trade deal stuff between the US and China, because all these stories are played right now and the market is going upside down and volatile. Okay. Going to gold, we will be checking out that chart. Just first of all, just check out silver. We saw that so-called let's say rebound in silver and gold, and I did that stuff via my FX guidance site. You saw a trade setup, and I have to admit I deleted that trade because it took too long, and I went in at 1402 with a target to that upside here, 1430s and 1450s up the road. And interestingly, the setup was absolutely correct. In that case, my patience was gone, and I simply skipped that trade because I made a couple of pips there in the EURUSD trade and just deleted that one. Later on, that silver trade, run up to the upside in direction where I wanted to. But that's trading. Sometimes that happens. The next targets to the upside, as you can see, the Fibonacci retracements here are in direction to that 1450s and 1475ers. And of course, if you check out this last high here, which is the first target for longer term, is 1490s. It's gonna be not too easy for silver and for gold skyrocketing the next days. But in the current process, going into the last month, slightly going into the last month of the year, it might be a so-called let's say relief month for gold and silver for all precious metals possibly, and it's going to be interesting because a lot of countries even they bought gold, massively gold. I spoke about Russia last week, and it might be interesting to be buying that on so-called dips strategy, buying on dips, but which means that when the silver spot rate here is going back in direction of 1410, 1420s, it might be interesting to try to catch that move for a next move upside. Same stuff with gold, which is going back possibly to 1212 and 12.8, catching that one, and direction to 1230s back up where it once was. Okay, so a couple of things. I spoke about that stuff. The most important currency pair, I didn't speak about that. I'm just doing that right now, is Euro-US dollar. Closing that one, and we still have the chart from the last week, which is still pretty much actual, because you got still that 113.80s or 113.79ers here at the 61.8 level, which is about to be scratched possibly. And not to forget, on top of that, we will be observing that options as well from the Euro-US dollar rates, because we still have a couple of volumes up there in direction 114.20, 114.40, and 114.50. So if you count and if you calculate that, you got a volume of 2.5 in direction 3 billion. So that doesn't sound too much, but in case of leverage and stuff like that, it might be getting interesting if that kind of a level is going to be scratched. I marked that one here with a blue box, and you see that marked another level with a blue box here. So this first target here in direction of the 114.20s might be getting interesting. And don't forget, in the last days, something like was happening with consumer data, so-called CPI data from US, and the so-called velocity of inflation is coming down a bit. Why is it coming down? You can imagine the more the oil prices are going down, and the velocity of that slide of the oil prices was very, very, dangerous, I would say. And the more things like that happen, the higher the impact on inflation is, because if oil prices are going down heavily, the effects on inflation are going to be important as well. So that means less inflation. What does it mean in the longer run? Less inflation is maybe the Fed is going to, let's say, slow a bit with hiking processes. And that could mean that the euro has some room to relax, some room to go back up a little bit. So that's the only explanation and maybe the strategy behind that, and that the market is trying to, to soften that euro-US dollar slide and going back up in direction to that 114 and to that round marker of 115. So just saying that, it's my personal opinion on top of that, of course, which I was explaining with a couple of fundamentals and a couple of sentiment data and a couple of option data. So if you have some questions or some special market ideas or some special wishes, yeah, Alex, is there something clients are wishing for? A couple of questions?
At the moment, there are actually no questions at all, Dirk.
Perfect. That sounds perfect.
Yeah. Great.
Okay. I need to inform you guys that I think next week Friday, we're gonna skip that day because nobody's there, because there's a trade fair going on in Frankfurt.
Exactly.
And that's the point, that a couple of you guys and myself are not in front of the desk, not in front of the computer, not in front of all the platforms, because we are visiting the trade fair. All right?
Great. Thank you very much, Dirk. Thank you.
Okay, you guys, happy weekend, and of course, hopefully a sunny weekend. Relax after a nice trading day, a couple of good trades, and as you like, we will be hearing us at the 30th of November, so in 2 weeks. Thank you very much. Bye-bye, Alex.
Bye, Dirk. Thank you. So thank you very much for your comprehensive analysis, Dirk. Thanks to the audience for listening. I hope you enjoyed today's webinar. If you did and would like to review it, you can do so anytime. Just give us an hour or so to upload it onto YouTube. I'm wishing everyone a good day ahead and looking forward to the next webinar with you. Goodbye.